Well, you know what happens, Akiko, is it continues to be this bait and switch. You know, you get people's hopes up, then you get them there and you think, hey, something's good is going to happen, and the next day this comes out, and then we're back in the mud again. And I think that's what was bothering Powell yesterday, too. He's like, I'm not sure where we're headed here.
The big uncertainty is the big question mark here. I did think the market move was kind of interesting. Yesterday, during that press conference, we did see the market turn downward, perhaps on the expectation or the hope that the Fed would maybe move or signal additional cuts. That didn't necessarily come. And yet today, prior to the president tweeting this out, we saw the market up. So how do you think investors are digesting the decision that came down yesterday?
Well, I think what they thought was, okay, it's going to still be okay, and I think he'll take care of us the rest of the year. And what they don't realize is that there's probably bigger underpinnings. If you look at business sort of decaying a little bit, and then he oversees the global situation, the tariff, et cetera, it's probably bigger than they think, and then it shows up on a day like today.
There's been a lot of focus on that phrase, mid-cycle adjustment.
Yeah.
How do you interpret that?
Well, they keep wanting to go back to 1995 and 1998 because if you remember what happened, Greenspan was pushing those up and then it busted the market with long-term capital in 1998, which was a negative. I don't think we're like that this time. I think there's a different situation, and I'm not certain he understands mid-cycle investing. And one of the things about Powell that's been unusual, he's come out with different things. You know, it was just 8 months ago he said we're going to raise 3 times. And so people they don't know where he's coming from exactly on that mid-cycle. I think it'll be full cycle, by the way. When we finally finish, I think you'll be back to full cycle of declines.
When you say it's not like where we were in 1995, you're talking about the economic picture that we're seeing right now, or you know, after that cut, there were, what, 4 additional cuts on the back of that? You're saying you don't expect that this time around?
I think you will get that, but what they did at that time is, if you remember, the markets we had 98, which was a brief 2.5 month break in the market because of the global situation with Russia. Then it came right back. I think people are thinking, well, it might be that way this time. We don't happen to think it'll be that way. We think he's going to have to come back and do multiple cuts as opposed to just 2 or 3.
So a lot of this, at least Jay Powell has said, that has to do with the headwinds that are coming outside of the U.S. He's obviously talked about China. There's also the downturn we're seeing in Europe as well. I mean, 25 basis point cut, some would argue, is really, you know, is it enough to bring inflation to where the Fed would like it to be, given that a lot of these factors are outside of the U.S.'s control?
Well, Akiko, I think you're right there. I don't think we go that direction. He's too soft on it right now. I mean, he overshot by a couple in 2018, at least in our opinion he did. And he needed to go deeper this time, which means that for us, he'll probably be setting up to go deeper, have to go deeper. He'll be against the wall by the time you get into the fall.
So how many more cuts are we looking at this year?
Our guess would be 2 or 3. That's because we're expecting third quarter, the next 3 to 4 months are going to look really softer for corporate earnings than people expect they are.
Let me point to another tweet coming from the president, where he said what the market wanted to hear from Jay Powell and the Federal Reserve was that this was the beginning of a lengthy and aggressive rate cutting cycle that would keep pace with China, the European Union, and others. You know, one of the things the president has pointed to is also his concern with the stronger dollar. Presumably, if the Fed moves in this direction, but the ECB, as well as the BOJ, other major central banks keep their accommodative stance, the dollar only gets stronger, correct?
Right.
So how do you think the Fed toes that line between the pressure coming in from the White House? Despite what Jay Powell says, there's no doubt he's feeling that political pressure.
He is, but it's interesting about the president. He probably should have kept yelling if he really wanted, the dollar to be down and lower rates, et cetera. And so he changed out. Now he's got
That's
somebody.
Right, because he was going after Yellen during the 2016 election cycle, she was saying.
So then he turned on it. But what's happening is with the dollar, though, we're in a currency war. We've really been in a currency war for 6 or 7 years, as far as us being stronger and the other currencies being weaker. But what happens is now, I think they'll be pushed to do that at some point in time, where the dollar's going to have to break down somewhat, or we're going to really stagnate.
What do you mean when you say push to do?
Well, what I
that?
mean is if you keep having all the other currencies go down and the dollar stays strong into it, at some point in time, from a business standpoint, you're going to press things against us just from the standpoint of pricing, and then all of a sudden they have to show up and get really aggressive all at one time.
Yeah, and we've already seen some commentary, at least in this earnings season, on the currency volatility. Something to continue to watch. Ted, appreciate your insights today.
Yeah, thanks.